What's up, Gooners? Back with a trade recap. Today, we locked back in. Obviously, you guys know last week, fucking brutal. We got effed. Um, Another word for effed. Said it in the last video. Probably shouldn't have said that. Might get flagged by YouTube. We'll see. But, anyways, obviously, you see last week we got low key effed. Won the trade on Monday, break even Wednesday, loss. So yeah, pretty brutal for that, unfortunately. But you know what happens, right? If we lose that many trades in a row, we're bound to go on a win streak just because of the win percentage, right? So hopefully we got hella green this week. Obviously, we're starting off pretty strong, 1.8K today. Across all three accounts, we had $600 win across those accounts. Pretty banga of a trade. So we're going to go through it. All of that shiz, you know what we're talking about, right? We are now back green, thankfully, in the month of January. Let's see if we can keep that for the rest of January as well. So let's go through the trade that we took today and why we took it. Okay, so off market open, I actually thought that we were going to go down. We were going to go lower. We're inside of this giant 4-hour here. As you can see, we had already retested this 4-hour. And then we had inversed this 4-hour. Right, so I'm thinking, okay, perfect. We've already retested this. We don't need to go anywhere else, right? Let's go back down. At the same time, we have this low here, this low here, this low here, this low here, right? So we have a ton of stacked lows in the hourly, number one, with that only being 65 points. You can take all of that out in a 1-minute candle. You know what I'm saying? Then down in the 5-minute, we have these lows down here. Well, then that's fucking perfect, right? We have those lows, and then boom, now this low, this low, this low, this low. So I genuinely thought that we were going to boom back down. And I thought we were going to come back up. What I was predicting to happen is we come back up, hit this 5-minute, maybe sweep out this high, right? And then we take an inversion to the downside, take all this stuff out, come all the way down, right? And obviously, you can see that that's not what ended up happening. And that's totally fine, right? It's not that big of a deal. That's why we react off of our shiz. You know what I'm saying? Anyways, what ended up happening? So we have 2 hourly gaps, right? We have this one here, and then we have this one that's higher. All right, well, if you guys know about equilibrium, right, obviously that second gap is the one that's more in premium if we're going to want to sell off, right? So therefore, we're probably going to want to tap into this gap up here, right? So we're thinking that, yeah, okay, we want to tap up into this. Let's see if we can take a trade either to that or take a reversal off of that, because we can see that we're in bearish market structure. This is also an SMT, as you can see with this high down here. So, like, we're bound to go bearish at some point, right? I don't know if we're going to inverse this gap in the next hour, but we're bound to go bearish, and that's what everything is telling us, right? In the daily time frame, is realistically, we're going to go bearish. But, right, doesn't mean we have to take a short. We can take something else. So what ended up happening? Okay, so off market open, we boomed back up. I saw it retrace into equilibrium. We're also inside of 15 minutes. I was like, okay, let me take an inversion down. This is our time. We need to go down. I'm ready to go down, right? Ended up not happening. What ended up happening is here in the 5-minute, okay, we created this 5-minute gap right here. And this black line right here is this hourly gap. I had this second hourly gap marked out. Right, that's what I wanted to see us tap into. So we obviously created this gap right here. So off this candle, I said there's one of two things that can happen. Okay, number one is we can hit this 5-minute gap and we can take a long up to this hour, this hourly gap, right? Because obviously we know that that's going to get hit, right? This is just, building structure, pushing back upwards. Or what we can do is we can hit this hourly gap and then take a trade down to this 5-minute, because then it's, we're trading either through this gap, right? Once again, we can do one of two things. If we're going to continue bullish off of this and we just trade through this gap, realistically, we're probably going to hit this hourly, trade back into this 5-minute, and then continue back up, right? Now, if we're going to reverse back bearish, which I thought we were going to do, right, we just trade right through. So we'd hit TP either way. So that's what I was thinking, right? We can either take longs up to there or we can short off of that back down here. We ended up tapping into this 5-minute. Before hitting this hourly gap. So that was still intact. That drawn liquidity was still intact. So I was like, perfect, okay. Tap into this 5-minute. Now I'm looking for an inversion back to the upside. I got in really, really early. It You could say it's a smart play. You could say it's a dumb play. Whatever the fuck you want to say. I hit a 1 to 3 R, so you can say what you want to say. Guiding off this 30-second inversion because the minute was just way too high for me. This minute was right here. And as you can see, we didn't even fucking get that, right? We fucking off this candle up here. So obviously I don't want to take a trade like that. This 30-second inversion was way up here as well. And if I were to enter this trade up here, right, off of this, I'd have to go stops below here, target this. That's negative R, right? And even then, that's not even the entry. The entry on the 30-second would have been up here, right? So therefore, that's not something that I want to take. So I'm willing to take the risk of getting that better entry because I know that's a strong draw on liquidity. I know that that's what we want to hit, right? We've pushed up this far. At that point, we had pushed up this far into this hourly gap. Why would we not tap into this one? You know what I'm saying? Why would we come all the way up here, waste all this energy to push past this gap and then go back down? There's no point for us to do that, right? So that's what I'm thinking to myself. That's what I have in my head. And I could have honestly done this and targeted like a fucking 1 to 3.7, but I never even usually hit 1 to 3. It's like this is one of my only 1 to 3s that I've most realistically ever hit. And I only risked $200 because, we're managing risk. $200 loss realistically in the grand scheme of things isn't going to do anything, right? So managing that risk, knowing what we need to do, perfect, beautiful execution. That being said, right, we entered off this 30-second inversion. We ended up getting in a little bit lower. It was really good. This inverted, and I was like, okay, yeah. And then we pushed lower, and I was like, perfect, right? That's my buy. That's my buy position right there. We ended up getting in right here. This was exactly where I got in. This was exactly where my stop was, exactly where my take profit was. 1 to 3 R banger, absolutely beautiful. $200 to make $600 across all 3 accounts. As you can see, those are all qualified accounts as well. $1,800 day, right? Now we're back in it, back ready to fucking push for the rest of January. I got a shit really bad right now, so I'm going to wrap this up quickly. But yeah, that's the trade from today. Super self-explanatory, but very good example of being reactionary instead of predictive, right? I was way too predictive this morning, and I could have taken a long, technically, right, off of this morning. Could have taken a long. We had this 5-minute gap right here getting tested, as you can see right here. Swept this low inside of this gap. Realistically, right, probably going to push back to the upside. We also have a ton of liquidity up here. So could have taken like an inversion off of this. I don't even know where an inversion is. I guess technically this inversion. Could have taken an inversion back to the upside, targeted these highs or maybe that 5-minute gap that I wanted to get hit, right? But I thought we were going to go lower, right? So there's no point in me taking that trade if I just think it's going to be a little retrace for a continuation back down, right? Obviously, therefore, I don't want to take that trade, but we ended up pushing back up even though I thought we were going to go down, and I still caught a trade, right? Because I was being reactionary. I was reacting off of what the market gave me, right? I was knowing that, okay, this is our draw on liquidity. At that point, we have a very strong draw on liquidity. This is exactly what I know is going to get hit. Okay, we either hit our draw on liquidity, react off of what it gives us, take a trade maybe to the downside, or we take a trade up to our draw on liquidity, and that's exactly what we did, right? We reacted off of what the market gave us. If we never tapped into this 5-minute, then I wouldn't have taken a trade, right? But we reacted, boom, got it, all golden, and we're chilling, right? That's the trade we took, and it was beautiful. Very good delivery, all of that jazz, perfect. Right, we also had an SMT here with ES with like this low down to whatever. Let me look. Nice, man. Like right here, something like that. Like these lows. The S&P looks really weird. Anyways, yeah, banger trade though, but perfect example of being reactionary instead of being predictive, right? Because obviously I was way too predictive at the beginning of the market. And therefore, I paid for that, right? I missed a long off market open. I missed these beautiful longs that you could have taken. Now, I don't personally trade like that. I don't personally like taking trades right off market open. But you very, very, very well could have taken a trade off of that, right? And my roommate did take a trade off of that, and he banked off of it, right? So, therefore, better to be reactionary than predictive. Reacting off of what the market gives you, that's the main lesson for today. And just being flexible, literally being flexible. Don't be too stubborn. Flip your bias sometimes, right? I flipped my fucking bias because I knew, okay, we're going to go up and hit this, okay? So I flipped my bias. And I was even thinking longs and shorts, right? I don't have a bias. That's the main thing that people get fucked up all the time. If you're watching this video, if you watch to the end, good for you because you're about to get some sauce, right? I never have a bias. I don't have a bias. I'm reacting off of what the charts gave me. In this situation, we were right here and I was thinking, okay, I can take shorts, I can take longs. I can take longs up to this, I can take shorts off of that, right? I don't have a bias. Okay, even here I was like, okay, probably looking for shorts, right? But you could have taken a long and could have reacted off that, taken a long, okay? Same thing here. I don't have a bias. I have a draw on liquidity, and depending on if I get an entry to that draw on liquidity or if I take a trade out of that draw on liquidity, right? I'm taking longs or shorts. Okay, so there's no bias. There's draws on liquidity. Wherever you know is the value that's going to get hit, you take a trade depending on what the market is giving you for that, right? So in this scenario, the market gave me a trade to that area. The market didn't give me a trade to that area, then realistically what I would have done is probably take some shorts down to this 5 minute right here, right? So what we would have done here in this scenario is probably a 30-second inversion. This one right here, shorts from here, here, down to here, right? And that would have worked too. This is the trade. This is the shorts that I would have taken if we didn't get that 5 minute retrace first. Shorts down to a 5 minute, okay? Perfect, beautiful, easy, okay? Reacting off of what the market gives you instead of being predictive, instead of saying, okay, I need this to happen, I need this to happen, I need this to happen. You're not gonna get everything that you want to happen every single time, right? So you gotta be reactive off of the charts, reactive what it gives you. You're gonna be beautiful, you're gonna be an amazing trader, okay? Trade off those draws and liquidity. Anyways, that's gonna be it though. We're back. Hopefully we have a really good green week this week. Make a lot of fucking money, you know what I'm saying? But that's going to be it for your boy. I'll catch you boys tomorrow if I take a trade. You know the drill. If I don't take a trade tomorrow, you won't see me. Anyways, that's going to be it. Peace out, yo.